Hi, everyone. Thanks for joining us today for this wonderful podcast. Today we have Matthew Brewer with us from EQRP. And again, I'm Christy Brock,
I'm Margot Kennedy.
and we are WeCRE. We invest in commercial real estate. So we have Matthew. Matthew, thank you for joining us today. We really appreciate your coming on. You want to say a little bit about yourself?
Yeah, sure thing. And Margot and Christy, thank you both for having me on. Really excited to share a little bit today. My goal will be to just talk about how you can self-direct your retirement for a few minutes. So that's my goal and my aim today.
Excellent. We appreciate it. So what we're going to start out talking about first, I'm going to run you through a couple of slides that basically, you have to do better with your retirement income. Getting the low returns is just not going to work for you in the long term. So I'm sure I'm going to share a couple of slides from a presentation that Margot and I do, and presentation is it's time to up your investing game. And what we go through, and this is a much longer presentation, but we basically go through why it's important to earn the higher returns. But this is just a quick highlight from that presentation. So if you look at the stock market's return from 2000 until 2024, and I pull this data from officialdata.org, you can check it out for yourself and use different time periods. But during that time, the S&P 500, if you invested $1 in 2000, it only grew to $6.03 in 2024. And that is a 7.64% return per year, which sounds great. But then when you adjust for inflation, it's only a 5% return. The stock market can be great. Diversification through the stock market can be great, and it should be a part of your portfolio. But think about this when you invest in uh, a portfolio and you're getting a better return, you can then get a significantly better amount of passive income. So if you have a $400,000 portfolio and you invest that portfolio at 3%, well, you know what? Hey, you're only going to get $1,000 a month. If you invest that portfolio and you're getting what the stock market average, you're going to get 2,500 a month. If you can get 20%, which is doubling your money every 5 years, it's $6,667 a month. And those are the type of returns that Margot and I target for our self-storage and other types of investments. But what we're really going to talk about today is how can you get those better returns? So your traditional IRAs, your traditional 401ks allow you certain type of investment vehicles. But what Matthew is going to show us today is, hey, here's how you can do even better. Here's a vehicle that you can utilize so that you can get a better return. So now I'm going to turn it over to Matthew. Thank you so much.
Yeah,
Please go ahead and share your presentation.
you got it. And I think that's actually a perfect segue into, where I'll start with the presentation, just because I think for nearly all of us specific to retirement, I always just think about, I was told in high school at some point, the phrase set it, forget it, how just, a portion of your paycheck for, 40 years, give or take, it just gets funneled into a 401k or an IRA. And then at the end of the day, when you're 60-ish, give or take, depending on when you want to retire, you just hope it's enough. And then that's the game plan for everybody, regardless of your background, your trade, your income. You just contribute money, and then you hope it's enough a few decades later. And as you guys know, and some investors on this call know, but for others, it's a brand new world that you can actually use a retirement account and keep it tax deferred and invest in real estate. For some people, it's brand new again. Some people, you've heard of that concept before. So I'm just going to take a few minutes to dive into that. And I'm going to start very generic and just talk about what self-directing means. And then we'll dive into more specifics. But just to catch everybody up to speed, um, self-directing your retirement account, in essence, is taking more control and ownership of your investments and what you invest in with your retirement account. So I just always think for the general person, who's just contributing to a retirement account, whether it's an IRA or 401k. Your options are target date fund, mutual funds, index funds, bonds, and that's about it. And really, there are so many people that think that that's it. That's all that the IRS allows you to invest in. But the truth is that's not the case. You can actually, what we mean by self-directing is one, it's about control. So you having the ability to actually pick where your funds are being invested, but also it's unplugging from the system and it's investing in alternative assets like real estate, self-storage, multifamily, cryptocurrency, precious metals, a variety of different asset classes, and those are qualified in the eyes of the IRS. Um, I think that there's just this misnomer that maybe you can't use retirement funds to invest in that type of asset class, or nobody knows how to do it because nobody's talking about it. And
I think
so,
that's an important point that most
mhm,
people they just don't know that they can and they don't know how to get started.
yeah,
So I completely agree with you there.
Yeah.
absolutely. And I think that's a huge part of just what we do as a company is we've just realized uh, that just the lack of awareness around it is kind of shocking, even for people that are even raising capital for deals and things like that. They don't realize that even their investors can use retirement accounts, and so it's just a really unique concept that I'm excited to dig into. And I'll just touch a little bit more maybe on why someone would want to do it, because again, what you do is you're taking control and you're deciding where your investments go. Why? I think again, to Christy's point, um, your returns are likely going to be pretty lackluster if you keep it in a 401k or an IRA forever. Um, and that's um, it really is just the fact of the matter that you're going to experience better returns if you're investing in more performing asset classes. And then to get a little bit more logistical, why someone would want to do it, uh, really you would want to have maybe some pre-existing retirement funds already ready. So maybe you've got a balance of $100,000 or more, and it's all again in one bucket. You can move a portion of that or all of that and diversify. You want to invest with WeCre, put some of that into self-storage. You can do that and see a portion of your retirement account grow at a faster rate, maybe get a taste test, figure it out, experience the returns, see what it's like to actually see a good chunk of money come back to a retirement account, and not experience. I mean, and even a lot of these accounts too, there's so many hidden transactional fees and asset under management fees that you don't really notice. And so, to really tune back to the main point though, why would somebody want to do it? There's discontentment with the system. You have eligible money, and you may have an investment in mind. Maybe you are a real estate professional, or WeCre, say you're just interested in a particular asset class. Those are great reasons why someone would want to get started. And then
Happened to me. Yeah.
yeah,
Yeah.
that's a
I,
great point.
I, uh, had money in a 401k, which I mean, an IRA, and it was growing at the, pace of a snail.
Hmm.
And I wanted to invest in, commercial real estate, but didn't have the funds to do it. And then someone in a webinar like this told me about investing with my retirement funds, and it's done really well.
Hmm.
I'm making far, far more than I was before. So
Yeah, and that's a really good point. That's even how it was for me and my wife. I remember I looked at her IRA like it was a year to year balance, and it literally hadn't changed. It was basic, or minus some cents, but it was essentially the same balance over a course of a year. And I was like, okay, this just isn't it. This is not going to work for us for you know years to
Gotta do
come. And
better.
so
Right.
yeah, got to do better, especially because, and this is maybe going down a rabbit trail, so I won't go quickly, but, a lot of people, you don't want to just survive in retirement. You do want to be able to maybe not live the most lavish life in the world, but be comfortable, be able to maybe give if you're passionate about giving, live a comfortable life. You've worked hard your whole life. You don't want to just try to penny pinch and survive. And,
Right.
anyway, you want to live a quality life at that point in time. And so, um,
And
anyway,
also
maybe.
it's worth noting that 30 years ago, retirement, when you retired, your retirement was 5 years, 10 years.
Mhm.
And because life expectancies just weren't as long. These days, your retirement is likely going to be 30 years or
yeah,
more. And
Yeah.
so you really have to have a solid plan. Your funds have to work harder for you. Also, 30 years ago, a lot of people had different types of retirements. They had pensions, and pensions were guaranteed income. So you put in however much, and you were guaranteed 4,000, 5,000, 6,000 every month without fail until you die. Now it's, hey, this is your bucket. You are in control, and it's up to you to make that bucket work as hard as it can for you. And so having that checkbook control makes a big difference in your ability to supersize your returns and really, power through to grow those funds as big as possible.
Yep. Well said. Couldn't agree more. Um, and I'll just jump into logistically kind of how it works for a little bit here. And I could even share a case study as well. But really the concept of how it works is pretty straightforward. So I like to use the, I guess, example of, if you have a 401k or an IRA with a traditional in a financial institution like a Fidelity or a Schwab, one of those, big, huge institutions, you log in and see your account balance. And again, like I mentioned before, you can select the mutual fund that you're invested in or the index fund. But you pretty much log in and see a balance and where you're invested, and that's about it. Whereas with the self-directed plan, you get to actually basically edit and adjust all of those features. So you are the one who has the access to the actual cash in the plan. And then more so than just tweaking a target date fund or a mutual fund, you actually have the decision-making power. In this case, you're the trustee and the participant and the plan administrator, or the technical words there, but as to why you have power. But you have your bucket sitting in a qualified checking account, which we'll talk about a little bit later. But you get to pick, okay, it's not just Fidelity giving you some options. You have all the options in the world within the IRS code, which again, in a way is pretty broad. Like you have a lot of asset classes that you can consider. So you get to plug and play of, okay, I've talked to WeCre. I want to put this percentage of my portfolio in their self-storage facility. Okay, I'm also interested in this X asset class. I want to put another percentage there. You can also still keep, a percentage of your account in the stock market. That's perfectly fine. Like Christy said, it's another great way to diversify. Maybe you don't want to have 100% of your balance there, but you could have a portion there still. That's perfectly fine. But you're the one making those decisions. You have complete control. There's no middleman. We always like to point that out. So many of these institutions, you can just get bogged down with delay after delay after delay. But in this case, because you're the trustee, you have those decision-making transactional powers that give you real authority over the plan. And
Matthew, let me jump in right there and give a real world example.
Please do.
With our Access Jackson, our self-storage investment, we have several investors that have self-directed IRAs, and then we have one or two investors that have self-directed 401ks. And the difference in speed and their ability to take advantage of investing is night and day. With a self-directed IRA, it's a 2-week or more process because they send in the documents, everyone signs, it has to be approved and reviewed, etc. And then the funds get wired. With the self-directed 401k, one of our investors who increased his investment recently, it was, he made the decision. He went onto our investor portal, he signed his subscription agreement. The next day, he was able to wire funds out. You have that kind of control and that kind of ability to quickly take advantage of opportunities as they arise, because as you know, everything is on a first come, first to fund basis. So it's whoever gets their funds in, they're the ones who actually get to take advantage of that investment. So it's, again, there's many of these kinds of examples and why a self-directed 401k is a great option.
Yeah, absolutely. And Margo, do you mind if I even use your story as an example here? I feel like this could tie in pretty well.
Yeah, well, for sure. And I was just about to say that when Christy shared about our investors, I had a number of investments through my IRA, and every time I did it, it was just a cumbersome, pain in the neck, lengthy process with loads of paperwork. And then I learned about EQRP and using a 401k checkbook plan, and it's just that simple. And so I moved everything over to EQRP, and it is so much easier than what I was doing before. I can't believe how hard they make it.
Yeah, I know it's funny how hard it is. And then, I think you guys had a great point from like a speed and a timeline perspective, but even from a tax perspective, the 401k versus the IRA, excuse me, there's something called UBIT tax, which if you have a self-directed IRA, I'm sure you're familiar with. So if you invest in any kind of real estate asset where there's debt financing, which is nearly everything, then that passes down a tax called UBIT to an IRA investor. And at this point, I'd say if you've used a self-directed IRA for quite some time, you're probably just used to it. It's part of the process. But they
Right.
don't want you to know that in a self-directed 401k, again, they're both still retirement accounts qualified in the as the IRS. It's just a different tax structure. So an IRA is in Section 408, 401k is in Section 401, easy enough. But because of the distinction in tax codes, if you invest in an asset where there's debt financing, again, that trickles down to the IRA investor, but it actually doesn't trickle down to somebody who's invested through a 401k. They have what's called a UDFI exemption. So that it stands for unrelated debt financed income. So you're exempt from that type of income in an asset. So without getting too much in the weeds there, that's such a huge benefit for a 401k investor. And even like we have so many members that sign up with us ultimately because they're just saying, literally just establishing the account in itself is saving me so many, tens of thousands of dollars in the long run. And it's unfortunate at the end of the day because a lot of self-directed IRA investors aren't aware of that. They roll funds over, they start that process, and then a couple of years later they're meeting with their CPA, and the CPA is like, "Hey, I know you were looking to grow your tax-deferred, hard-earned money, but all of a sudden you have to pay, whether it's a couple thousand or $10,000+ in UBIT tax." It's unfortunate. So I like to highlight that's a huge benefit of an EQRP in the 401k structure over an IRA. Anything else you guys wanted to add on that point?
No, that's a great point. And on every investment that I've been a GP on in the past, 6 years, it's always a question. How much is UBIT? Is it UBIT? And in the past, the best I could tell people is, look, I'm not a tax person. You need to speak with your tax person. But now my response is, you wouldn't have this UBIT problem if you just did a 401k, a self-directed 401k, you
Mhm.
know, and I leave it with that.
Yeah.
And give them the link, so they can sign up. But
No, that's
yeah,
great. And I'll add this too, for anybody that's currently invested with an IRA, you can actually re-register those assets. Marco, I think that's what you
I
did.
did. Yep.
Yeah. And
Moved
it's
them all
it's
over.
not it's really not too terrible of a process. It can sometimes take some time with the custodian just because, like we talked about, they're never super quick because it's not in their best interest, but it is something that you can do before the asset actually sells.
It
So if
was
you're
not, it
invested, you can
really wasn't
re-register.
cumbersome at all. It was easier than getting into it in the first place. It was really pretty quick because you guys
Yeah.
helped out a lot. So
Yeah,
it's not bad.
that's awesome. Well, perfect. And I'll just kind of I'll hit on a few next steps as well. So we've kind of talked about overarching how, what, why, those topics. But if you're interested and you would be curious to know what next steps would look like and what it even consists of as being an EQRP member, our first step is we always just like to do a strategy call with anybody who's interested. Because we do know that everybody has different retirement goals, number they want to hit, how they want to get there, the asset classes that they're interested in. We always like to have that one-on-one discovery call to get to know more about you and your retirement goals. And then if you decide you wanted to move forward, we do initiate the rollover process with you. And I always like to mention here one thing that we do believe in at the EQRP is just having, really direct one-on-one support. So we have account managers that are assigned to every single one of our EQRP members. And that individual is going to be there through the life of your EQRP membership. As long as you're a client with us, you're going to have an account manager. And that person will help you from the very beginning with the rollover, the documents associated with your plan, but then any compliance questions that you have moving forward, or if you need resources about a variety of different things, you're going to have one particular person that you work with, which is nice for somebody who, this is new to them. They haven't ever self-directed a retirement account before, and they need some hand holding. I know I would if this were, brand new to me because it is overwhelming. And so you have a direct point of contact. It's not an 800 number. It's not, somebody who's just looking at case notes all the time. You have one particular person that you work with, which is really, really handy. And one other note that I'll make here is doing a rollover. I always like to mention this. That's a non-taxable event. A lot of people think I'm moving it from one account to another. I'm going to have to pay taxes, so it doesn't make sense. I don't want to have to pay taxes and then invest in real estate. Again, it's non-taxable, so I always like to highlight that. And then thirdly, we'll help you set up a checking account directly tied to your EQRP. It's set up in the name of the account. And that's where I know we talked about earlier, you're the trustee, you're the plan administrator, you have all these powers, and hypothetically you might be thinking, that sounds cool, but how does that actually work? It's through a bank account like this. And even at the EQRP, we have no authority to make transactions on behalf of anybody's plan. It is solely in the name of their plan, which they have control over, and then we provide support through the account managers, like I mentioned. So you get the bank account set up. We'll help you explore different asset classes, introduce you to different people. I know in this case, you're listening to this because you are interested in investing with WeCre, so you've already got a leg up, which is great. But even for somebody who's brand new and they're not sure, we'll always offer that to our members. And then fifth and final, because WeCre is intentional at what they do, they're going to send you paperwork as soon as you decide to commit and invest with them. And so when that happens and it's new and you're not sure how to fill it out in the name of your EQRP, will help you with those details as well. And so, really, that's it in a nutshell. What I wanted to point out, which Mario, maybe I'm stealing your thunder, so you go ahead and take it away.
No, what were you going to point out? Go ahead.
Oh,
Oh,
I have
sorry.
a question.
Finish your thought.
Oh, yeah, sure, please.
So, if someone has an IRA, they can put a certain amount in every year. If you have a self-directed 401k, you can put a certain amount. How does the amount that you can stash away every year compare for an IRA versus a 401k?
Love that question. In an IRA, I could be wrong, but if I'm wrong, it's off slightly. I believe in 2024, the limits change every year, usually a little bit. In 2024, I think it's $7,500 you can contribute to an IRA. In an EQRP, it's $69,000. And I know it sounds too good to be true. I always like to mention this. If you want to double check me, the IRS calls this type of plan a one participant 401k. Feel free to Google one participant 401k IRS contribution limits, and you'll see it plain as day. And then I'll even highlight one other benefit that a lot of our members take advantage of is a personal loan. So in an IRA, whatever's in the account, you can either invest those assets that are a part of the plan, or you can take a taxable distribution. With an EQRP, you have the ability to actually take a personal loan from your account, and you can use that money that you borrow to do actually whatever you want, obviously, as long as it's not illegal. But then at that point, all you're doing is just making interest payments back to your plan. So you're paying your plan back, which is in your name. So it's a really unique way to also access some capital from a plan like this that you can't inside of an IRA.
That's awesome.
Those are some really great points. The fact that you can put $69,000 a year, that supercharges how, especially if you are someone who is in your late 40s or early 50s and you haven't saved as much as you would have liked to, and you're not exactly where you want to be. The ability to put those large deposits in every year really will help you get to where you're trying to go by the time you're ready to retire. Because again, passive income is king. And that's the goal. Grow your funds in a tax-free environment as quickly as possible. And I will throw this out that, when you're looking at investments, as we said, diversify. Maybe some people have crypto, maybe some people have money in the stock market. A lot of people that I know, most of the people that I know, have some money in real estate. And real estate has always been a solid investment, especially when you're looking at, different asset classes. As I mentioned before, our Access Jackson investment, we have a projected return of over 23% annualized. It's a short-term 3-year investment, and we're already doing distributions. And what's cool about that is, the distributions, if they're going back into your EQRP plan, you can reinvest that into something else and it builds. And so, everything is just building faster and faster for you. So, Matthew, we thank you so much for taking this time to come on with us and have this discussion. It's been fantastic. And everyone, you can see on the screen here, there's the link if you want more information. And as Margot will vouch, EQRP will hold your hand and talk
everything.
the benefits, the how to do it. They'll walk you right on through it. And that's that's the scary part for most people. How do I do this? And EQRP will walk you on through it. So we appreciate it.
Thank you
Yeah,
so
absolutely.
much.
Thank you both so much. Yeah, it was a pleasure.
Thank you.
Bye.
And thank you everyone for watching. Have a wonderful rest of your day. Bye-bye.
Thanks again.